Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY Report for Friday, November 12th, 2021. Before I jump into the charts, just once again, please click like if you like what you're seeing and subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notifications each and every time the Daily SPY Report has been uploaded for your viewing, generally by around 5 p.m. Central Standard Time, Chicago, each and every trading day for the next trading day. Mondays, by the way, will go out on Sunday afternoon. Let's jump to the charts. Just want to also let you know that I'll be covering the U.S. dollar a little bit. I've had a few requests for that, and I'll show you what I'm thinking on that weekly chart. But with regard to the SPY, I do like to start with the big picture and work my way in. We rallied about a week ago to within 0.5% of that long-term trend line that today is at 474 and a quarter. It really forms the basis for that 422.22 long-term channel bottom. I don't anticipate seeing that anytime soon. It's just that the longer-term structure clearly remains bullish into next year, holding inside that area. But, midterm, holding below 474 and a quarter, an area that we essentially tested about a week ago. And I say essentially because for me, pushing to within 1% of long-term resistance areas is a test. And the market has backed off since then. It has not elicited a near to midterm sell signal, though, but it should be known that holding below 474.02 does allow, if you will, 436.98 by the end of December or sooner. And the indication for that, for me, would be a settlement today, for instance, below the 461.89 to 62.05 area. That, once again, is a convergence right now between a rising one-third speed line and channel structure, rising channel bottom, both of which are projected off the October low area. So that 461.89 to 62.05 can contain selling through next week. But if we close below it, then we have a sell signal that I think will likely to play out through the rest of November and into early December. I would anticipate pretty quickly, within probably 2 to 3 days or so, the 453.19 to 454.05 area, which is nothing more than the early September high, also the early September high settlement price. That area within several days of closing below 461.89, able to contain selling on a 2 to 3 day basis. We could get a nice bounce off of that, possibly back up to that low 460s channel bottom. But I do think the emphasis becomes heavy into December below 461.89, and I would then anticipate that 436.98 rising channel bottom within about 3 to 5 weeks. And if we were to close below 453.19, you can narrow that to within 2 to 3 weeks. So that is sort of the downside. But just know that there is no sell signal at play right now. Holding above 461.89 will keep the 474.02 long-term trend line in reach by the end of next week. Let's take a look at the support and resistance levels for today. I've got intraday containment levels bracketing the market right now, below at 464.39 and above at 467.36. All those minor points are carefully chosen. The most two notable that stand out, once again, are 64.39 and 67.36, both of which can firmly contain intraday trade. We could trade inside that zone for the better part of the day. We did so really on Thursday. There were different numbers, but roughly the same. And so that is sort of our pivot points also on an intraday basis. We could play inside that area for much of the day, but if we break 64.39, you should expect 461.89 to 462.05 intraday. Once again, that rising channel bottom I showed in the previous slide. And inversely, pushing or opening above 467.36 should yield 470.49, which is, if you recall, this short-term, near-term channel bottom that I've been illustrating earlier in the week that we opened Wednesday below, set the market on a bearish pace for the day. Thursday was an inside day, but 470.49 is still there as a session containment level. It no longer has pivot point qualities. In other words, holding below it, I'm not expecting the low 460s anymore, but that's certainly in reach. 470.49, if tested today, can contain session strength. It's not far off the actual move high from about a week ago at 470.65. And so if we close today above 470.49, then the 474.02 long-term trend line is likely on Monday, where once again we can top out into December trade. And also, how should I put this? It's a meaningful upside pivot point into later year. I've been comparing the SPY with the DIA, the Dow, and the IWM, the Russell 2000, both of which last week elicited longer-term buy signals. I haven't watched those closely. I did put out some analysis on them early in the week. But if we were to close above 474.02 today, and that is a long shot, but let's say by the end of next week we settle above that long-term trend line, then the SPY is showing longer-term strength into Q1. I would ultimately anticipate the 521.14 long-term rising channel top within probably about 3 to 5 months near the end of Q1 into early Q2, where the SPY could actually place an annual high. And then, of course, along the way, there is an intermediate channel structure at 494.14. So, closing above 474.02, 494.14 becomes a 2 to 3 week target where we could tap out at least on a weekly basis, possibly on a monthly basis, and then closing above the 494.14 level. We're probably just 2 to 3 months away from reaching that, what would then be a still targeted 521.14 rising channel top. So that kind of covers the SPY. I'm going to leave you with the support and resistance levels at the end of this video, but let's jump into the US dollar. This is a weekly chart of the US dollar index. I do cover this market lightly in my commodities analysis, in the other sort of real work that I've been doing for the last few decades. And I did have a buy signal. It got a little sloppy there in later September, but in later October, about 3 weeks ago, we had a clear settlement above a combination descending 2/3 speed line and slightly rising channel top. It's mostly horizontal. I think this buy signal is for real, and it is good above 93.455 to 93.975. That is a zone of support that can absorb selling through the rest of the year, and above which I say, this could be a matter of 3 to 5 weeks. It could take 2 to 3 months. But I think by the end of January, let's say, I think that 97 handle resistance is likely. And there's other things going on up there. A 5/8 Fibonacci retracement at 97.77 AB, which is the 2020 high against the recent 2021 low in January. So that upper 97 handle is significant. It is an objective. It is expected by the end of January, and it can contain buying on a quarterly basis, possibly into later 2022. Along the way, just want you to know, and I'm going to give you this rate of ascent, the rate at which this sort of nearer term, midterm rising channel top is at 96.02 this week. That is November 8th, means the week of, because it's a weekly chart, it's rising 17 cents a week. So next week it'll be, 96.19, so forth and so on. And that is a formation that can contain at least weekly, possibly monthly buying pressures. From there, once tested, the market could fall back into the 93 handle long-term support, which once again could contain selling into the first quarter, and above which still expecting the upper 97 handle. If we were to close above that 96.02 rising channel top at the end of any week, then it becomes that 3 to 5 week scenario I mentioned initially. Within about 2 or 3 weeks, we should reach that 97.998 area. Now, I do need to emphasize, this is just an opinion, but, the correlation between the U.S. dollar and the stock market is a 50-50 proposition. There are times where they're highly correlated, and there are times when they are not at all. So I don't think you should read too much into this, but if you have a preconceived sense of what this means for the stock market, then by all means, you can continue with that assumption. I'm just sort of laying out what I see for the U.S. dollar going forward into Q1. I'm going to leave you with the support and resistance levels for today. Please click like, please click subscribe. If you like what you've been seeing, once again, subscribing to the Wicked Stocks YouTube channel will provide you notifications each and every time the Daily SPY Report or any of our work has been put out on YouTube. On Sunday over the weekend, there will be a weekly analysis once again of the Dow, the Russell 2000, and the triple Q, the NASDAQ 100, or the ETF variations of that, the triple Q, IWM, and DIA. And the Daily Spy Report for Monday will go out on Sunday afternoon as well. So thanks for watching. Click like, click subscribe, and we will talk Sunday afternoon. You have a great weekend.